We are covering the fundamentals of disability income insurance for your health insurance licensing exam. This coverage is designed to do one thing: replace a portion of your income if you become sick or injured and cannot work. The exam will test you on why the benefit amount is almost always limited to 60 or 70% of your pre-disability income. This is not to save the insurance company money. It is to prevent malingering and create a financial incentive for the insured to return to work. If a policy paid 100% of your income, there would be little motivation to recover and get back on the job. A classic exam question will present a scenario where an applicant wants full income replacement, and the correct answer will focus on this return to work incentive. The core of a disability policy and a major exam topic is the definition of total disability. The two key definitions you must know are own occupation and any occupation. An own occupation policy is more liberal and provides benefits if the insured is unable to perform the specific duties of their own job. For example, a surgeon with a hand tremor can no longer perform surgery. Under an own occupation definition, they would be considered totally disabled, even if they could work as a medical school professor. In contrast, an any occupation policy is much stricter. It only pays benefits if the insured cannot perform the duties of any occupation for which they are reasonably suited by education, training, or experience. The surgeon in our example would likely not qualify for benefits under this definition because they can still teach. Expect questions that require you to identify which definition is more favorable to the insured. Own occupation. Policies offer broader protection but have higher premiums. A helpful way to remember this is being able to claim disability while I can still do some job is my own best situation. Now, let's consider what happens when an individual can return to work but not at full capacity. This is where partial and residual disability benefits come in, and the exam loves to create confusion here. A partial disability benefit is often a simplified, flat-rate payment, frequently 50% of the total disability benefit, paid for a short, fixed period when you can work part-time. A residual disability benefit is more precise. It pays a benefit based on the percentage of income lost due to the disability. For instance, if you return to work and suffer a 40% income loss, a residual disability provision would pay 40% of your total disability benefit. This directly replaces the residue of your lost income. The exam trap is to use these terms interchangeably. Remember that residual is tied to the percentage of lost income, while partial is often a simpler, temporary, and flat benefit. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.